Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, July 15th, 2014. We had an update across the board with a couple of key things that happened, but it was actually as a trading day a little bit tough. The ES futures essentially did nothing all day. They gapped up, went sideways, never really pushed higher or lower on the day. Nasdaq was the real highlight of the day because it broke out above a key level at 39.18, pushed up a little bit, gave traders an opportunity to trade the futures long, but then actually fell back to settle just above that key level. So a couple things in the market today that we're going to look at internally, and then we're also going to look at let's take a detailed look at the individual sectors today. So let's move on and take a look at the major futures contracts and see what they have to tell us. All right, first up here, the ES futures. You can see that we opened and closed at about the same area. So really, not a lot to be done today as far as trading goes. We did recapture the 10 EMA on a closing basis, but we're pinched between the 10 EMA and the risk level from the secret exhaustion warning. So until we really decisively move away from that area, we're still just basically trapped here sideways in this range that we were before we dumped at the beginning of the previous week. So key levels to watch obviously going to be the risk level there for the seeker, and then the 10 EMA. If we do break out of the risk level, that 2000 level at 8/8 is going to be very, very important. The NQ futures were a little bit more interesting today because we gapped higher and then made some progress to the upside. So as you can see, the NQ futures did clear the previous high and stayed above it for the close. Negative here is that they did try some higher prices and left the day with this little bit of a doji here. We did exceed the risk level from this 13 exhaustion warning on a closing basis, but that does not break the risk level. We need to follow through and take out today's high by at least one tick to negate the exhaustion warning that's in place right now. So for now, we still have an exhaustion warning in place in the NQs and the S&P side. Moving on to the TLTs, a little bit of, obviously a little bit of a risk-off kind of a move here. This is a little bit of a better move. We gapped down but did move lower on the day. Still have this kind of double top in place right here from 2 weeks ago. This 4/8 level at 112.50 is going to be pretty formidable if we drop all the way down there. Oil futures really didn't do too much today, but they did circle the wagon here, holding above this key 4/8 level at 100, and also obviously above the 200 period moving average and the static trend line. MACD is buried below the zero line, so we do have downside momentum. So we could see some downside activity here if they want to test this 4/8 level at 100. Gold futures today tanked pretty hard. Basically just ran from the high of the 3-week range all the way down to the bottom, and we settled below 1312.50, which is the 4/8 level. So I would expect after the big range on Monday, we'll probably see a little bit more of a measuring day tomorrow, just to work off that initial impulse. Actually, check that. I just checked the technicals real quickly here. We actually do have potential to follow through because we settled below 7 days ago and also 11 days ago. Just a little quick bar counting gymnastics. So the table is set for follow through tomorrow, even though we had this pretty extended and pretty aggressive reversal candle to the downside. Our 10-day trend is neither overbought nor oversold at the 1.04 level, but is obviously moving in the direction of getting towards overbought at 0.85. But there's still plenty of gas in the tank for the bulls to work with if they want to squeeze things higher here. We haven't looked at the total put call ratio in a while, but you can see that we are starting to move down here towards below kind of that comfort zone of 0.9 to 0.8. Exceeded it to the downside here a little bit. If we get to the 0.55 area, or even better yet, the 0.5 area, we'll get that climactically overbought reading. But for now, there's some more room here before we do record that. But if we do in fact record that climactic reading, we'll be on top of that and certainly alert the Tradesight crew. All right, so let's take a look at the major sectors ranked from best to worst. Today, the best sector was oil services, which bodes well. at this point, the transportations were also pretty strong. So that was a pretty good showing, even though the market wasn't really able to get up and go. The XAU was a source of funds. That was the last laggard by a wide margin. The utilities were also fairly weak. Utilities right now have been kind of a safety haven. So a little money coming out, a little more money coming out of the XAU, and also the utilities rotating into the late cycle plays like the oil services and the transports. So as far as sector analysis goes, it was actually a pretty decent day, all things considered. Here's the oil services Top Gun. While it was Top Gun on the day and did have a bit of a bounce, we do remain below the 10 EMA. We need to get above that to go back to short-term positive. We're not there right now. Really need to get that done to get back to the upside. Start talking about this 8/8 level and perhaps even the overbought territory on the Murray math box. We're still only 7 days up in the secret exhaustion count, so there's plenty of room there. Just note though that we do still have this negative condition in the MACD, and there's plenty of room before we get to the that zero baseline. The Dow Jones transports were also fairly strong, and the big thing here is we did make a new high on the move and a new high close. Keep in mind that we're going to be 11 days up in the countdown here. So once we get to 13, especially if we're below this this plus 2/8 level, that's going to be very notable, and that'll be something that the market's going to really have to work through to continue to the upside. It's probably actually going to be a very strong inflection point back to the downside. BTK index was one of the best ones on NASDAQ, but all it did was really just kind of gravitate back towards that 4/8 level. Need to kind of get back above this level to get back up and start talking about the previous high, and then 7/8 and maybe even the 8/8 level at 31.25. Semiconductors didn't really do all that well today, but wound up closing below where they opened today. Only 8 days up in the secret countdown, so there's plenty of room here to the upside if they want to keep things going. Note that we really don't have any closes below the 10 EMA, so we are still short-term positive. Utilities took a bit of a hit today. You can see the weakness there in the group. Starting to get some distance here below the 10 EMA. We're going to find some pretty decent support here at the 50 in that general area. That's probably also going to be coincident if we continue to the downside with the zero line on the MACD, so watch out for that. The XAU got hit pretty hard today, but didn't lose the 10 EMA. So we're 11 days up here in the secret exhaustion run. So we have a couple more days here before we get to that exhaustion point that a lot of folks are looking for an inflection point. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.